Are you looking for ways to fund a down payment on the purchase of a home? Well, if so, you might be looking into tapping into your 401k or an IRA as a way to make that down payment. So, in today's video, we'll be going through what you need to know about using funds from your 401k to make a down payment on a home. We'll be diving into all of that in just 1 minute. Hi, my name is Thomas Castelli, and I'm a CPA and tax strategist who helps real estate investors and business owners keep more of their hard-earned dollars in their pockets by using the tax code to their advantage. If you do like this video, make sure to hit the like button, subscribe button, as well as that bell icon so you don't miss out on future tax savings videos. Now, without further ado, let's go ahead and dive right in. All right, first things first, let's briefly recap what a 401k account is to begin with. All right, so a 401k account is a retirement savings plan typically sponsored by your employer that allows you to make pre-tax contributions to the account, and then the money will grow tax-free in the account until you later withdraw it in retirement. So what exactly does pre-tax mean? Pre-tax means that you get a tax deduction for every dollar that you contribute to your 401k account. So just a very simple, basic example here. If you made $100,000 and you contributed $10,000 to your 401k plan, you would now only pay tax on $90,000. In addition, that $10,000 within your 401k account would grow tax-free. So the earnings from stocks, bonds, whatever you put that money into, whatever you invested into through the 401k account will grow tax-free. And then later you can withdraw it in retirement, which is currently age 59 and a half. Okay, so now that we know what a 401k account is, how can you tap into it early to access the money you need to make the down payment on your home? There's going to be two ways, and one of them is going to be the preferred way, and we'll discuss why that is. All right, the first one's going to be a loan from your 401k account, and the second way is going to be a hardship withdrawal. All right, so let's dive into the loan first. Okay, a 401k loan is exactly what it sounds like. You're taking a loan from your retirement account. And this loan is usually going to be up to 50% of the balance or $50,000, whichever is less. So the cap is going to be $50,000. Now, the benefits to doing this are there's no early withdrawal penalty for taking the loan. The interest payments end up going back into your account, and there's flexible repayment terms. Now, there are some risks here that you do have to navigate if you are considering this option. There could be repayment challenges if you do leave your job. So if you switch jobs, that loan will become immediately due. And also, if it's not repaid, it could be treated, as a withdrawal, leading to taxes and penalties. All right. So again, when you're taking a loan from your account, it's exactly what it sounds like. You're taking a loan out and you have to repay it. And there's a cap. The maximum amount you could take is $50,000. All right. And this is generally the preferred option. Now, the other option is a hardship withdrawal. Now, a hardship withdrawal is designated for immediate and heavy financial needs that are typically unexpected. Okay. Now, whether or not a down payment falls into the hardship withdrawal will be a facts and circumstances test. But in some cases, it may not fall into that. That means if you take the money out early, you will be subject to income tax and potentially a 10% penalty if you're under the age of 59 and a half. And the other con of this is that it reduces your retirement savings. Now, the pros of this are you don't have to pay it back and you get immediate access to the funds. But again, it might not always be possible to make the hardship withdrawal for these purposes, which is why this is not the preferred option. Now, here's another avenue. If you do have an IRA account, there is an exception. There is a way to tap into the IRA money for a first-time home buyer, okay? Now, you can withdraw up to $10,000 without a 10% penalty for your home purchase. Now, this doesn't apply to 401ks, but it does, again, apply to IRAs. Now, while you will avoid a 10% penalty on that $10,000, you will still have to pay income taxes if it was made with pre-tax dollars. So this is just another alternative. Again, instead of tapping into a 401k, you tap into your IRA using the first-time home buyer exception. Now let's take a look at the pros and cons of using retirement accounts as a whole for a source of funds for your down payment. So the first thing is you do get quick access to cash. They will typically be lower interest rates than if you got a personal loan And then on top of that, it can help you secure a home in a competitive market when you do need to tap into those funds relatively quickly. Now, the cons, and these are, in my opinion, some pretty big cons, disrupting your retirement planning. Again, your 401k or your IRA account, which is an individual retirement account, if I didn't mention that already, they're meant and designed for retirement. So tapping into them early can mess with your retirement plans and it perhaps could even set you back a few years. So it's not something that is not an ideal source of funds. Now, there can be potential taxes and penalties. Again, if you don't pay back that loan, you can be facing taxes and penalties. And in the case with a hardship withdrawal from your 401k, you might not always be able to do it, and you might be subject to penalties if you do take the money out early. And even if you do use the IRA method, you take the money out using the first-time homebuyer exception, while you might avoid penalties, you still are generally going to be subject to taxes if you did put that money into the IRA pre-tax. And there's also repayment risks, right? What if you can't afford to pay back your 401k loan? What if something gets messed up? What if you change employers? If you change employers, again, that loan becomes due immediately. All right. And if you don't repay it, you're subject to taxes and penalties. So, bottom line here, if you ask my personal opinion as a tax advisor, the 401k is not the ideal way to tap into. It's not the ideal place to get money for a down payment on a home. And if you do need to tap into the 401k, the loan option is going to be the better option of the two, whether you use a loan or hardship withdrawal. Now, if you do have an IRA, I would look into that first because there is that first-time homebuyer exception. The downside of that is it's limited to $10,000. All right, now let's talk a little bit about alternatives to consider that are not involving your 401k or an IRA. Personal savings, right? It's very simple. You save up over a period of time and you just tap into your personal savings. There are down payment assistance programs out there that you could look into. There's also things like FHA loans, which have much lower down payment requirements than a traditional loan that you might get from a bank for a home. I think the FHA, as the time of this recording, has down payments as low as 3.5%, where you're typically paying around 20% with traditional loans. Then there's, of course, gifts from family. Perhaps your parents, grandparents, or somebody else in your family could gift you the money or even perhaps loan you the money you need for that down payment, and you might be able to get it at a lower interest rate than you would from a bank or other sources of loans. The other way is that if you already own a home, to tap into a HELOC, which is a home equity line of credit, or a simple home equity loan on an existing residence. So these are just some alternatives to consider that are generally going to be better than a 401k, at least in some cases. All right, so here's some final thoughts. So tapping into your 401k to purchase a home can be useful, but comes with risks, as we discussed here in this video. Now, if you're not sure what to do, you definitely want to speak to a financial planner or a tax professional before making any decisions and to help identify which option would be the most beneficial for you. So do you have any questions in this video about using your 401k or an IRA as a source of funds for a down payment on a home? Drop them in the comments and let me know. Also, don't forget to like, comment, and subscribe so you don't miss out on future tax savings videos, and we'll catch you in the next video.